Hi everyone, Stephen Molnar here, Head of Education for Resimax Group. I'd like to welcome you to this video. In this video, we'll be covering information about the Australian economy and property market, specifically looking about Melbourne. It will give you a lot of confidence when you're speaking to your clients about investing in Melbourne. Cheers. What are we going to talk about? Well, as I said, we're going to talk about what's happening with interest rates that's different from before. We're going to talk about rents and how we've had some of the biggest drops in 7 years. We're also going to be talking about how the jobs have rebounded. We're going to talk about the China sanctions, and we're also going to talk about the Australian government stimuluses and the effects they've actually had. All right, so the way I'm going to break this up to make it a bit easier is I'm going to break it up into health, economy, China import restrictions, jobs, unemployment sectors, interest rates, borrowings and inflation, the housing market, and finishing off with predictions for 2021. All right, so that's what we've got in store. So let's just go through these. All right, so the first one is I really want to focus in on health. Now, for instance, in the US, you were hearing about 4,000 deaths a day. Canada's just passed 20,000. There's just terrible stories out of the UK and Spain and Italy. I don't need to go into too much detail about those. I'm sure you've heard them just constantly on the news. What I did want to do was compare some of the different results that Australia has with some of our trading partners and the people we're close to. So on this graph, it shows Australia, the United Kingdom, the United States, Malaysia, and Singapore. Now, the higher up you are on this graph, the better off you are. And this is a graph from the Lowy Institute. So it's primarily focused on the health outcomes that have happened in a country. And you'll see that, Singapore didn't start off too well, but as you move further along, and these are once they've had 100 cases in a country, what does the graph look like? So you can see Singapore, the very top right-hand corner in that sort of pink color, it's doing really, really well. You can see that other countries, like in the blues, you've got the United States and the United Kingdom, they're doing sadly, tragically, terribly in terms of a health response. Australia, we've had a bit of a second wave, and that was mostly in Victoria, but now we're actually doing really, really well, and we're actually getting very close to Singapore. Malaysia, tragically, has had a really bad wave, and we wish you all the best. We know you're all locked down in Malaysia, and our prayers are with you. So I hope it gets better for you guys much sooner. What the Lowy Institute did was they looked at multiple factors in what was going on in the health response. Remember, this is the health response to the COVID-19 pandemic. And what they did was they ranked the best and worst countries in terms of the results that they were getting. And you can see here that New Zealand actually came out #1. And if you recall, at the first sound of something going wrong and the first sense of there was this virus, they literally just shut the entire country down, completely shut down. And they were able to manage it really, really well. Now, some would say that that caused a lot of economic pain to start off with, but you know what? They've come out of it and done really well. But they do have some issues with external trading, and tourism is a very, very big industry in New Zealand. But you know what? They've saved a lot of people. Also, Vietnam and Taiwan and Thailand, they've done really well. And Iceland, Rwanda and Cyprus. Australia has come in as the 8th best country in all of these different factors. But in all the other publications I've read and the way they've measured it per capita, in straight per capita sense, we've done incredibly well. So what that means is, and I just want to put this into a summary, is Australia has prioritized the health outcome, which has created a really good economic outcome. And Australia has actually been seen by the rest of the world as one of the best countries in the way that they've actually dealt with this. pandemic and outcome. So when you look at it from a health and economic outcome perspective, Australia is probably going to be higher up the list than just 8th. Also, Australia has one of the highest testing rates in the world, and surprising to some, it's free. The testing is free in Australia. I've spoken to some friends in the US, and a couple of them actually had to pay. They got a bill afterwards, and some of them range around $500 for some of their initial tests. And that's obviously going to discourage a number of people to get tested. But the government needs to know where the hotspots are, what the percentage of population is that's infected, all of these sorts of things. And we've also done really well in terms of our contact tracing. We've been geographically blessed by being an island. We're also geographically blessed being in the southern hemisphere. So we've only had to go through one winter. The people up in the northern hemisphere had to go through 2 winters. So 2 seasons being locked in close confinement with one another. So we've been lucky in some respects. We've also got a very compliant population, and we've had a lot of bipartisan support, which means both sides of the government and the federal and state governments have worked really well together, put everything aside and just said, look, let's do the best we can with this. To give you an example of how much they prioritize this, and this would surprise people in parts of the world, but absolutely shock people in places like the UK and the US. Recently, there was an outbreak in Perth, and this was a security guard who was at one of the quarantine hotels. And one of the travelers that came from overseas ended up infecting him. So what the Premier of Western Australia did was he shut down all of Perth and 2 of the adjoining regions. So they shut down about 2 million people for 5 days, complete lockdown. You're only allowed out to get tested because this is how seriously they take it over there. They had gone for 10 months with 0 community transmissions. And that was something they were very proud of, and they absolutely wanted to defend all the hard work that they've achieved. So all the interviews of people in Perth and around, they were more than happy just to do what was required to make sure that they kept everybody safe, which is just extraordinary. Now, a couple of other important points around health is that you may have heard that there are reports of vaccine shortages around the world. You've heard that the Pfizer vaccine, there's not enough of it, so the European Union is going to prevent some of it leaving the Brussels, which is in the EU, for other countries until the EU gets all the amount that they've ordered. In the UK, that's where the AstraZeneca one is being made. They've floated that idea as well, but both AstraZeneca and Pfizer have said that they may not be able to hit all the orders that were pre-ordered by all the governments. Now, luckily, our government went in early and made these pre-orders, but our government did one extra thing, and they bought the license to actually produce the AstraZeneca virus, the vaccine, I should say, in Broadmeadows. And that's a suburb within the Melbourne Metro, it's just to the north of the city. And they'll be producing about 50 million doses of the vaccine. Now, why this is important is because the sooner the population, the majority of the population, get the vaccine, the sooner that we can get back to normal. So some countries are going to have to wait a very long time before they can get enough of their population immunized or vaccine with a vaccine to get back to normal and have that herd immunity. In Australia, our population is about 25 million. We're producing around 50 million. That's enough for all Australians. Plus, they're going to be making enough for the Pacific Island nations as well. And so our Prime Minister has called Fiji and many of these other Pacific neighbours and said, you know what, we're making enough for you guys as well. We're going to give it to you guys. And they were incredibly pleased about that. But one of the reasons that we're doing it is because it'll open up a travel bubble, which again is good for their tourism, it's good for our airlines, etc. But it also means that we have a lot of guest workers from the Pacific Islands, places like Vanuatu, etc., Tonga, etc., that come to Australia and work harvesting a lot of our food, our fruits and vegetables, etc. And we really need that because there hasn't been the amount of backpackers in Australia. There hasn't been the ability of the retirees, or what we call the grey nomads, driving around. And so a lot of these farms have had to let their produce go to waste. So they're also behind this push to get a lot of extra workers safely into Australia. Now, one of the other things about Australia is that one of the few countries that hasn't had to resort to what's called an emergency approval of the vaccine. The US and the UK have done this. We haven't had to do this. A few other countries, I think Israel as well, may have done this. It has gone through the normal process, all the normal due diligence that any drug or vaccine has to go through, which gives tremendous confidence to the population. They don't cut any corners to make sure it's safe and it's effective. So because we've had such low numbers, in Australia, we have overall, in terms of community transmissions, we might get 1 or 2 a day in total. Other parts of the world are getting thousands or tens of thousands. So we're very blessed to be in that position. So we've been able to wait a bit longer to make sure that these vaccines are absolutely safe. Now, another thing the Australian government has done is they put together their inoculation plan for the population, but they brought it forward by a few weeks to a month. So it's going to start in late February. They've also enlisted 5,800 pharmacies. They're going to be invited to join the phase 2. So phase 1 for the elderly and for the vulnerable and the medical workers will be done at hospitals and GP clinics, etc. But then once we get to phase 2, there'll be a lot more data, and then people will be able to just go to their local chemist or pharmacy and get a jab, exactly the way that they have been doing for years with a flu vaccine, or a flu jab as we call it. And the government's already put aside about $2 billion for all the logistics to make that go incredibly smoothly. I just want to finish on health on this one thing, which I think is really important to consider. Victoria is the only jurisdiction in the entire world that has had 28 days or 2 lots of 14-day cycles after their second wave with 0 community transmissions. This is why the rest of the world is looking at Australia and thinking this is a really safe place to go on holidays, or to immigrate to, or to return as an expat to, and live and raise my family and work in my job, etc. So, that again is very hard fought for. A lot of people work very hard to give us that health outcome, because we understand that having a strong health outcome leads to a very strong economic recovery. So initially, everybody talked about our economy being, it's going to be a deep and long recession. It's going to be one of the worst recessions ever because the world is in recession. And it was unusual because of a supply side and a demand side shock. And so everyone said it was going to be incredibly bad. So what the government did, and just to remind everyone, Australia was in a very strong position going into this. We were coming off about 30 years of sustained economic growth. The government had a surplus in the budget that they were going to bank and pay off some of our long-term debt. And our debt is one of the lowest in the world anyway. But that's what they wanted to do. Then COVID hit and they realized that they were going to blow that whole surplus and more in terms of really stimulating the Australian economy. So what I wanted to do was just give you an idea of what that looks like. So you can see that the blue bar there is the GFC spending. So when we had the GFC, our federal government spent about $51 billion in total in terms of stimulating the economy, and that was spread out over 4 years. In comparison, if you look at the far green one, that's all the government spending, and it's also the Reserve Bank spending. So that's about $700 billion, plus the Reserve Bank just announced yesterday another $100 billion they're stimulating with buying bonds. So that's $800 billion, plus you add to it about 42 odd billion from people taking money out of super and then spending that, and a few other things, and you're edging up towards nearly 900 billion Australian dollars being pumped into the economy over the space of not 4 years, but 1 year. So this is one of the reasons why Australia has done so incredibly well, is because we've had federal and state governments, we've had institutions like the Reserve Bank, we've had ordinary citizens, we've had businesses literally pumping in a lot of money into the economy. So what I wanted to now show you is a graph, and this graph is the consumer index. So one of our biggest banks is Westpac, and they put together the Westpac consumer index on a very regular basis. They've done it for many, many years with one of the universities here. And you can see that we had a wobble when we hit the GFC, and then we started getting better, and then we had the second wave that hit Victoria. But once we started getting a grip on that and moving through it, you can see on this that the consumer index is higher than it's been for quite a number of years. So that means that people are comfortable in consuming and spending money and putting that money back into the economy. Businesses have already also noticed this, and this is the business consumer confidence. Again, you can see the huge dip that we actually had, but you can see that business confidence in spending for plant and equipment has roared back and is even at higher levels than it was for the last couple of years. And on this chart, this shows how the Australian economy growth rates have been, and you can see that Australia has literally gone through what's called a V-shaped recovery. So there's some of the previous events that have happened. You can see that the COVID-19 was a bigger, deeper, taller recession, but we recovered incredibly fast to levels where, we're actually, in some measures, we're actually at the same level or above what our economy was in the past. So our one of our other biggest banks, so Westpac and CBA, are our the state of the state every quarter. And what they reported, which was really interesting, was that Victoria came in third out of the growth rates, the combined growth rates on multiple factors out of all of the states. Now, you'll recall that Victoria was hit with one of the longest lockdowns in the entire world. So our other states were actually doing well. In Victoria, we had over 700 infections at one stage. But we knew that we'd come back. The other states were about 6 months ahead of us, and they all started moving, and Victoria was just a little bit behind. So the only states that are in front of Victoria is Tasmania, which is a tiny state with a very small economy, and also the ACT, which is really a lot of people there rely on government and spending and jobs in the federal government. And again, that's a very small territory with a very small population. And Victoria came equal third with South Australia. And South Australia has a smaller population than Victoria and a smaller economy as well. So Victoria is actually doing really, really well. And in fact, Victoria retained the top position for economic activity. And that's really important. It beat out every other state in that particular category of the state of the states. And that's actually the most important category. So that economic activity. It also won another category, and that's construction. So Victoria had the highest level of construction compared to any other state in Australia. So another really important thing, because remember, any money that's spent in construction generally has a 3 times effect. That money goes into construction and gets circulated up to 3 times through the economy. So it's better than spending it on other things, such as maybe a railway line, which you invest that money once and it doesn't come back again and again and again through the economy, or a managed funds, etc. So in terms of our economy, Victoria had the greatest growth rate in the last quarter, and that's based on gross state product. Our consumer and business confidence and the sentiment is really, really high. It's one of the highest we've had for actually a number of years. And the IMF has very clearly said this, that economic recovery will depend on the availability of the COVID vaccine. And they specifically mentioned us in every quarter they put out the World Economic Outlook, and they specifically said Australia, that had surprised them. They'd already upgraded us once, but in the last quarter that they measured, the September quarter, they were surprised as to, even based on their upgrade, how much more we'd grown above that. So the IMF's actually predicting some really good things for Australia. Now, overall, quite a few economists have chimed in and said that even based on our upgraded performance and projections, we're already beating that. And a few economists have said we will probably beat that by a further, we'll come in 6 months even earlier than the last predictions that were only made at the end of last year. So we're doing really well from an economic sense. However, many people have asked, but what about China? They've heard China has been banning lobsters, and they've been banning timber and barley and cherries and a number of other sorts of things from the Australian market. But what most people don't know is, yes, they banned barley, and they've generally been targeting things that they can get elsewhere, because they're not entirely happy with Australia and their comments about finding the origin of the COVID-19 virus, and a couple of other things relating to the Uyghurs in detention and these sorts of things. So and the comments that Australia's made around Hong Kong as well. So but Australia's stayed firm. But what's been happening is that China has actually bought more wheat in the last month, in December, than they have ever bought from us. And some of you may know that instead of barley, you can use wheat for brewing beer and for feedstock for animals, particularly like pigs and cows and these sorts of things. So yes, they have said, no, we're going to ban some of your products, but in fact, some of the others are doing better than they've ever done. Also, you may have heard that they've put restrictions on coal. Well, that's been on thermal coal. And thermal coal they can get from other places as well. But we have a number of bulk carriers that are sitting off ports in China, and there have been widespread blackouts in China over winter because there wasn't enough fuel to burn to generate electricity. So, China begrudgingly has to accept some of our exports. Now, BHP, the largest miner in Australia and exporter of iron ore, said that, again, their last shipment in December to China was the largest they have ever done in their entire history. Now, that's really important because the Chinese have, to stimulate their economy, the preferable way they do it is they do massive infrastructure projects. And to do infrastructure, you need, for buildings and bridges and railway lines and all these things, you need a lot of steel, and very high quality steel. And literally the best steel comes from Australia. The only other place that they can get steel from is Brazil, but Brazil, their exports have been flat, and the quality from there isn't the same. And the Chinese makers of steel have said, for the strongest steel, which you need for the biggest buildings, etc., you need Australian iron ore. It's really that simple. Also, Australian iron ore is a lot cleaner and purer, so it produces a lot less slag, and it produces, very importantly, a lot less sulfur, which pollutes the air in China. And a lot of people don't like the amount of pollution there is in China. So I think maybe begrudgingly, China has no option, but they've bought record amounts of iron ore, but more importantly, at record prices. And that's actually given us a $9 billion goods trade surplus. And China is by far and away our largest trade partner. So I know many people are concerned that the Australian economy was going to suffer terribly, but for some of those goods that we can't export to China anymore, such as our wine and lobsters and cherries and some of these other sorts of things, they've already found other markets, including beef as well. So it really hasn't affected us as much as anyone would think. In fact, we're actually doing better because of it, because the Australian government and the agricultural bodies have worked really hard to explore and find new markets for our goods. All right. So let's talk about jobs and unemployment. So I just want to run you through a couple of these charts. So this is what our unemployment rates have looked like. Now, generally 5% is considered full employment for a country. So we're at 6.6%. It's not really that high. The graph, because it cuts off the bottom bit, you know, it looks like it's a big difference, but there's not a huge difference between 5.1 to 6.6%. And let me explain to you why. One of the other key things that's happened is that our participation rate has also gone up. So you might think, oh, well, the unemployment rate's a bit higher than usual, but there's a lot more people that have said, you know what, the economy's going well, I'm going to go out there and get a job. And so our participation rate is one of the highest that it's been in the last 5 years. So that will also make unemployment rates a little bit higher as well. So, you know, it's not too much to be worried about. Here is the unemployment rates per state, and you can see here that Victoria at 6.5% is actually below the national average and just above New South Wales at 6.4%. So in relative terms, we've already done a lot of catch up, and we're doing really well here in Victoria in terms of the unemployment rate. So some of you may be aware, in July 2020, 1 million Australians were unemployed, and our unemployment rate hit 7.5%. But that's still much, much better than what was predicted in double digits of up to 12 to 15%. And many parts of the world, very sadly for people, have hit some of those double figures. And for youth unemployment, there are places that are 20 or 30%. In fact, in Australia, 90% of all jobs that were lost during COVID are already back. And this is what Chris Richardson, the chief economist at Deloitte Access Economics, which is a global firm that does accounting and consulting, they said, although unemployment and underemployment will be much higher than they were pre-COVID, they're also falling much faster than feared. I forecast the unemployment rate will be back down to 5.5% by mid-2023. So that's one of the leading economic forecasters in Australia, and that's his opinion. Now, another great way of measuring how the job and unemployment sector is going is ANZ, which is one of our big four banks. ANZ has said the job ads, so the amount of advertising for new positions available, is a great measure of how well the economy is doing. And they've been measuring this for decades, and it rose in January. So there's actually more job ads in January than there were in December, which means that businesses are hiring and wanting to take people on. And that was the 8th consecutive monthly increase, and now it's at their highest levels since April 2019. So there's actually a lot of jobs, and there's more people participating. So It's really good. And for many years, Victoria has been one of Australia's strongest states for creating more and higher paying jobs than the other states as well. So that's a really important thing to consider as well. Now, some of you may know that the government here in Australia has helped businesses. So part of that, nearly $1 trillion that was spent in total stimulating the economy, some of that was to businesses to help them to keep employees linked to them. Because if they were linked, the business could start up much faster and continue on. And that's worked really well. And the second version of that was a tapered version, so not as many people, not as many businesses could apply for it. If they were already standing on their own 2 feet, they didn't need it, and it was also at a reduced amount. So that was JobKeeper. JobSeeker was for people who were unemployed and looking for a job. They got an extra supplement. And both of those, plus the mortgage repayment holidays that people with mortgages have had, they'll all come to an end at the end of March this year. But Alan Oster, who's NAB Group's chief economist, and NAB is the other big bank in Australia. So the big four is the Commonwealth Bank, Westpac, CBA and NAB, and these people deal with the biggest businesses and the most number of loans. Well over 90% of all loans are with the big four banks. So they have their finger on the pulse. They know what's going on, and they need to advise all of their clients, which are institutions and governments, their risk, all of this sort of thing. They have to be spot on as best as they can. They said, it might slow things down, but JobKeeper is less of a problem than people think. He was talking in respect to these programs stopping the property market increasing. And the Australian Industry Group, and AIG is the peak body for all business in Australia. They said the performance of manufacturing index increased by 3.2 points over the past 2 months to 55.3, indicating that manufacturing is expanding. And in fact, manufacturers normally are very quiet in December, January, but they've been flat out, and they've been building up the lost business they had from 2020. Now, it's not all perfect. The hospitality and tourism industries are still suffering. We've opened up our borders. A lot of Australians are very happy to take holidays at home and locally. And what the federal government has done is a lot of marketing towards that, and specific support. And and state governments have also been doing things such as giving out vouchers for people as a co-pay, so they spend money with tourism operators in the regions as well to really help their economies along. But it's not quite the same as international visitors. As an example, local tourists spend about $1,500 per person. People from China, they spend about $8,500 per person. Generally, overseas tourists spend a lot more money than local tourists. But you know what? It's really important to help the hotel and tourism industry as best we can, but really they won't get back up to speed until our international borders open, which at the earliest is going to be at the end of this year. That's maybe only a few selected locations. One of the other big industries that's suffering is the tertiary industry, the universities in particular. International students are normally worth about 37, I think it's 0.1 billion to our economy. Tertiary education has lost about 17,000 jobs. A lot of those were contracted casual and part-time because the overseas students couldn't get back into Australia because of our borders have closed. What some of the universities have done is they've banded together and they've chartered flights from Asia and had just students on board and put those students into quarantine hotels for 14 days, and then they'll be able to attend normal university campuses once they've cleared quarantine. That's being tested at the moment. We'll see how that goes. But what the government has done is they've recognised this, and they're spending $2 billion on another program called the Job Trainer program. And this is particularly aimed at younger Australians to help them get qualified, certified, trained in certain things. A lot of that money, so they'll get free courses, but a lot of it is not at university level. It's more a trade college, or what we call TAFE level, to be an electrician or a carpenter or something like that. So it might not be to get a degree in, say, arts or law or something. It's more practical hands-on education. All right, I mentioned that. Oh, okay. So let's talk about interest rates, because interest rates, these at the moment, they're really cheap. They're the cheapest I've ever seen, and in fact, they are the cheapest in our history. And it's also easy to borrow. The government, through APRA, which manages the banks, have loosened the requirements a little bit. And you see the combination of those two things, what it does is it fuels the property market growth. When people can borrow more, they can either enter the market or buy a bigger property. And when it's not as difficult to prove to banks that you earn a certain amount of money, you can afford it, they're more willing to lend it. Very importantly, property is seen as a hedge against inflation. So at the moment, our inflation rate is 0.9%, which is incredibly low. But many people, they like property because it usually outdoes inflation. So in net effect, because inflation is so low and the property market's doing really well, the difference, or that gap, is actually very exciting for investors, because if they deposit money into a bank account, they're literally earning next to nothing. Now, because the confidence of investors is coming back, this is what's probably going to happen, because this is what happened last time. They're getting such low yields or returns on their money in the bank, they'll say, well, instead of earning maybe 1% or even 0.5% return on my money, I could buy a property with the same amount of cash and I could be earning maybe 4% return or even more. And so many of those investors are going to start really thinking about, well, maybe, the economy's settled down, interest rates look like they're going to stay low for a long period of time. I might start investing in property. And that's what happened last time. And the property market really started to take off with investors going in. At the moment, owner occupiers, particularly first home buyers, are dominating, and investors, there's really not that many of them. But it won't take long before they see the signals and they start diving in. And here's an example of the Reserve Bank's official interest rate on a 5-year chart. Now remember, all banks and financiers, they will put a margin on top of this, but our interest rate is 0.1%, or 1/10%. So it really can't go much lower than that, because the Reserve Bank has said they will not go to zero, and they won't go into negative interest rates. So this is about as low as it's actually going to get. And this is just such an ideal time to really get into property, and many more people will start realizing this, and that's what will drive the property market up. Now, just to give you an idea of what I mentioned, the owner occupiers, which is that yellow bar, that's the first home buyers, they are absolutely diving in and dominating the market. The middle orange one is the refinanciers or the upgraders, and the tiny one is the investors. So normally there's usually a lot more investors. They're just holding off, sitting on their money and just waiting to see what's going to happen, but they're starting to sort of take advantage already. So APRA, which manages all the banks, they allowed loan deferrals. So the government did everything in its power to not let the property market fail, because Australians have about 53% of all their wealth tied up in the property market. So the government, it would be political suicide for them to allow that to fail. They were not going to allow that to happen. So about nearly 500,000 people deferred their loans, both business and mortgage loans. At the moment, there's still about 118,000, but the amount of those that are property related is actually much smaller. Many people started voluntarily starting their repayments, and you know, the banks have said that they will work with people one-on-one, because we had a Royal Commission here which really blasted the banks, and they need to win back some social approval. So there really isn't going to be the banks foreclosing on people and selling those properties as fire sales, because the property market's rising anyway, so they don't have a lot of risk and they don't have a lot of urgency to do that. So that's probably what's going to happen. As I mentioned, APRA have loosened the borrowing restrictions and requirements, so it's going to be easy for people to get in there. But the investor loans, the amount is way down, but the owner-occupied loans, especially in Victoria, have jumped by nearly 30%. And that is also feeding into why there's less people renting in the city and the CBD and close to it, because they're actually buying properties in the outer suburbs because they want a better quality of life. Now, as I said, official interest rates are at 0.1%. That's the lowest in our recorded history. But something very interesting, very unusual happened with our Reserve Bank in their last statements. Normally, our Reserve Bank never gives a hard date. And what I mean by that is they'll say, look, something like, they'll do it as a subject too. So they might say something like, once inflation returns to the 2 or 3% inflation band, that's what the Reserve Bank is tasked with by the government to do, is to keep inflation there. And then we see unemployment below a certain figure for a certain period of time, then we're likely to raise interest rates. That's the way they always say it. Subject to this, if this happens, then we'll look at doing this. This is the first time they've actually come out and said, we will not be raising interest rates any sooner than 2024. So they've given a hard date. They never do that. So, and in fact, it could be further out than that before they raise them. So what that means in real terms is, for people, they have absolute confidence and certainty that whatever they buy that property for, the repayments they can afford. And that is going to drive a lot more investors into the property market, because they'll say, well, I don't have inflation rate risk. So they're going to happily go in and buy properties that they know that they can afford based on yields, etc. And that's a huge thing, knowing that your effective interest rates are really not going to move for 3 to 5 years. That's at a variable rate, that's actually unheard of. But that's the level of certainty the Reserve Bank wants people to actually have in the economy. Now, the Reserve Bank did one other thing, which was a bit of a surprise, because in the past they bought $200 billion worth of federal and state bonds on the secondary market. What that means is that the governments, when they want to raise money to invest in and help people, they sell bonds, which is just an IOU that I'll pay you this amount in the future at this interest rate. And the Reserve Bank, rather than buying it directly from the governments, they bought it on the secondary market, because that also helps that part of the economy moving around that buys and sells bonds. So they bought 200 billion, which is a huge amount of money that is then available to the federal and state governments in their pockets, ready to go, ready to inject into the economy. But the Reserve Bank just the other day said, you know what, we're actually going to buy another $100 billion, another 50% more of bonds by the end of April this year, which is just a huge, huge number, and gives our governments huge amounts of liquidity and capacity to do whatever it takes to make sure that the federal and state territories and states get through this in a really good fashion. All right, let's now talk about the housing market. And I want to make it clear, because we talk a lot about this here at Resimax, that we get a lot of clients in Asia who say to us, oh, look, you know, to me or to Ken, I've seen some really good high-rise apartments in Melbourne that are advertised. And we have always said as a company that they are not the best opportunity for you, because you can't resell it to another foreigner, and local Australian buyers that's not the main type of property they want to buy and to live in. And some of them are just too small. They might be good for student accommodation, or they might be good for tourists in use with Airbnb. But we've always said to people, it's the amount of land that you have as a percentage of the price that's really important. And having a bit of space and these sorts of things just gives you so much more value. So I want to make that distinction, because you'll see as I go through that there is that distinction that's being made. All right, so we've had a really strong result in Australia in terms of property. Now, you may recall at the beginning of this pandemic, there were some of the banks have said that they expect the prices of properties to fall between 10 and 20%. One bank even said in a worst case scenario, it could go to 30%. One economist even said in his worst case scenario, it could go to 32% drops. We haven't seen any of that. In fact, we've had such a strong result that in December, property values were 3% higher than the year before. And in fact, this is the first time that in every capital city in Australia, prices have risen in every capital city. Normally, you might get a couple of cities out of sync with others. Some might be flat, some might decline a bit, others are going up. This is the first time that every capital city has gone up, which again just talks about how strong the economy is here in Australia. Now, the quarterly changes, this is Melbourne pricing, and Melbourne actually dropped 4.1% compared to its record high in March 2020, which was an exceptionally high point. So people still made money, it still went ahead, but it came back a little bit from that super high. One of the ways that we check how well the market is going, or we use as a thermometer or to the heat in the market, is we check for auction clearance rates. And you can see the first two there are for Victoria and New South Wales, 86%. And the writing might be a bit small, but more houses were at auction last weekend in Victoria than New South Wales. And New South Wales got a lot more houses, but Victoria is just the capital of auctions in Australia. And that gives you real-time, really good indication of the market sentiment. Usually anything 70% is good, 80% is really, really good, but we're approaching like 90%. I appreciate it's on slightly lower volumes than usual, but again, it talks to the sentiment in the market. Now, here is the vacancy rates across Australia, and this is actually important to look at. Normally in a balanced market, the vacancy rate is between 2.2 to 2.5%. And the December vacancy rate in Melbourne was 4.7%. And that's the worst result in 7 years. Now you might say, oh God, that means I shouldn't invest in Melbourne. But remember, this is the average for all of Melbourne Metro. So we have places, for instance, out at Amesbury, where the vacancy rate is 0.2%. So it's a tenth of what the average long-term vacancy rate is. So you've got to be very careful looking at averages. So remember, Melbourne has a lot of students that come in. We also get a lot of tourists. So we have a lot of small apartments in high-rise towers in the CBD. And those properties are in real trouble. People are trying to fire sale them. They can't afford to keep them. They're converting them from Airbnb to long-term. They're discounting the rents by hundreds of dollars a week just to get anyone in. So again, you need to be really careful where you're looking at in terms of the property stats, but that's the headline and that's what scares people. But when you know what we know is the right areas where there's high demand, and in fact, the areas where we have properties as a company and ourselves as investors and that we help our investors get into, those areas, not only is the vacancy ultra low, but the rental amounts has actually been going up. And if you speak to Leaf Real Estate, they'll tell you they've been renting them really, really fast. So there's some reasons for that, which I'm going to cover in a moment. So I've talked a little bit about city versus suburban, and the growth rates in the city, which represents proportionally a very big part of the average, have been going down. But in the outer areas, in the north and the northwest and in the northeast, property prices there have actually been going up. So again, shouldn't just look at averages, but that's what we generally hear in advertising. Mentioned about vacancy rates, about the demand shock, the demand just isn't there. The asking rents. There's also been another interesting situation is some jurisdictions in Australia have had a moratorium where they couldn't put up rents. So once that finishes, what you're probably going to see is rents either going up or those properties being re-let to new tenants after they've done a bit of a makeover, so they can evict those tenants, do a makeover, and then put it onto the market and put the rents up. So that's what you're going to find, but not for the type of properties that there's an oversupply, which is in the CBDs of both Sydney and Melbourne. But Melbourne has more oversupply of apartments in the city than, say, Sydney does. Valuations. This is actually really important from a finance perspective, because the banks know that properties like apartments in the CBD, particularly the really small ones, are really only for students. No one else really wants to live in them, or they're for Airbnb. Some of those properties, the valuations, when someone tries to refinance them, the valuations have dropped substantially, which locks them in. They can't actually even refinance to lower rates or anything. All they can do is maybe try to sell them. Whereas the opposite is true for the outer areas. If you speak to our mortgage brokers, they will tell you the stats show that those outer areas are growing and the valuations are actually often the same as the contract or even higher, rather than the city where they're often lower. Another side note that I want to mention on this is just commercial versus residential, because sometimes we get people asking us about this. I've never been a real fan of commercial, and right now proves exactly the point that I've made for years and decades actually, and that is that everybody needs to live somewhere. Everybody needs to live somewhere. So a lot of people, even when they worked in the office, many of them have worked out they can just work from home full-time or at least part-time. There is a huge amount of vacancies in office space at the moment. And if you would have invested in, say, office space, you may be looking at just zero returns or very poor returns for very, very long periods of time. Whereas all of those workers, they still need to own or rent somewhere. They need somewhere to live. So that's a really important point to consider when you're thinking about your strategies moving forward. All right, so sort of in summary, the housing market, it's the first time that all capital cities in Australia have been growing at the same rate. Property prices finished 3% higher this year than last year. Remember, they expected 20 or 30% falls, but in fact, it didn't do that. It went up by 3%. That was in 2020. But even in January this year in 2021, we're a further nearly 1% higher, and we now stand just 0.7% above the previous super peak of September 2017. So this is why property, particularly in Australia, is such a valuable asset in terms of building economic safety and security for yourself and your family. As I mentioned, Melbourne dwellings fell on average by 4.1% in December. Because Melbourne was in a lockdown for longer and it was impacted more than other cities for a longer period of time. But the first home owner market, and particularly that home builder grant, has actually been booming. And the federal government gave a special consideration to Victoria because of the length of the lockdown and extended the home builder for when they first do the slab an extra 6 months. So this last point is a really good point that I've said many, many times. The bottom quarter of the market, which is the best value part of the market, generally had the best performance over the year. In 5 of the 8 capital cities, the bottom 25% of values had the highest rate of value increases over 2020, right? Because That's the value in. You can't really build cheaper than that. You can't make the land cheaper than that. You have construction costs, and all of those things underwrite the value of properties at that low end. And the government always stimulates that lowest end of the market. So that's where all the growth and the strength and resilience is always been. So another thing, because of the COVID and working from home, the Australian Bureau of Statistics recorded the highest quarter ever of people moving out of the city. People realised they wanted a bit more space, they wanted a safer environment, they wanted a better quality of life, they wanted to spend more time with family, a feeling of neighbourhood and community. And Tim Lawless, the head of CoreLogic research director, he said, better housing affordability, an opportunity for lifestyle upgrade, and lower density housing options are other factors that might be contributing to this trend, along with the newfound popularity of remote working arrangements. So many of the experts in each of their fields, in terms of property, in terms of finance, in terms of the economy, have been agreeing with all the things that we've been saying to all of you via Maxi webinars, through articles, through showcases, etc., and through live events. We spend a lot of time as an organisation finding and collating this information and then making business decisions about this that are good for us and good for our clients. So in terms of predictions, I think the number one prediction though is this: if you watch the media, this is what happens. Media, there is a lot of positive media right now. What that's going to do is it's going to keep boosting confidence and encourage more people to buy. And the more people that buy, the more the prices will go up. And the more the prices go up, even more people will get into that market. And so it becomes a self-fulfilling prophecy. And whenever you see the media turning from negative to positive, that's a sure sign that the market is really going to take off. And with interest rates being locked for ultra low interest rates for the next 3 to 5 years, what that means is probably one of the biggest property booms Australia has ever seen. All right. And this is from Louis Christopher. He runs SQM Research, which is one of Australia's best property consulting firms and research firms. They, the government, will never let a housing crash happen in this country. And that's based on the scale and the type of housing prices and construction industry support that's already been given. So he's been around forever analysing the property market. And it's really clear that the government understands that the majority of Australians' wealth is stored in property. And the banks, they are willing to lend more on residential property than any other asset. All the stakeholders cannot and will not allow the property market to fail. And they will do whatever is required to make sure it continues to grow and is stable. Far more stable than, say, the share market or anything like that. That's an important point to consider with any investment. NAB's chief economist, he expects 10% growth over the next year in capital cities, excluding Sydney and Melbourne. He thinks there'll be about between 7 and 7.5%. Remember, we've already had 0.9% just in January this year. The Commonwealth Bank head of Australian economics, Gareth Ed, he's predicted 9% rise in houses, but only 5% in units. Again, differentiating those two types of products, because houses are much more valuable and sought after by Australians as owner-occupiers, and owner-occupiers represent roughly about 80% of the market. That's the main type of property they want. They want a standalone bungalow. We live side by side, not on top. And Louis Christopher from SQM, he again said that he forecasts only 2 to 6%. Now, one of the interesting things I wanted to mention is that the banks have forecast, around 6, 7, 8%, but the banks are always ultra conservative. And every time they've made predictions, I won't say they're wrong, but they're conservative. They're lower than what actually ends up happening. They're always trying to protect their risk. So in my opinion, I actually think given that we've already done nearly 1% just in January, I actually think we're going to be doing double digits this year. I could be wrong for Melbourne, but I know the outer areas that our clients buy in a quarter, we've had often between 2.5% to 3.5% growth. So I don't think all of Melbourne will get to double figures, but I certainly think that some of these outer areas that we specialize in will get to double figures growth for the year. All right, so guys, that's the first lot of predictions. I also wanted to say that our Prime Minister, he's actually said the economy is already on its way back and betters the experience of most advanced nations in the world. And I think that's a really important point to consider, that Australia is actually overall doing much better in so many respects than other countries. And that's going to have an impact on the last bullet point I'm going to cover on this slide before I finish. But I also wanted to mention this, and this was again from Deloitte Access Economics. They said by middle of this year, the US, UK, and Canada will have about 2/3 of their population vaccinated. It may be closer to October 2021 before Australia, the EU, Japan, Russia, most of Asia's tigers, and Brazil achieve a similar result, with the rest of the world seeing their rollout likely to spill into the start of 2022. What that means is that Australia will actually be in a really strong position. Our market will have started. Our main trading partners will be able to form travel bubbles with much sooner. And Australia, we export a lot of raw materials, and that's pretty safe to do. So we don't need a lot of people coming backwards and forwards. For our main trading partners, we're exporting a lot of agricultural and mineral sort of wealth. A lot of the other sort of exports that we do, particularly white collar or services, a lot of that can be done remotely. So, people are going to start seeing that Australia is a really great place to do business and to go to. And in fact, that leads me to my last point, which I think is actually my most important point, is around population immigration. Our borders are closed at the moment. So we get a lot of skilled migration from overseas each and every year. In fact, about 120,000 people come to Melbourne and make it home about every year. Sometimes a bit more, sometimes a bit less, but it's usually around that sort of number long term. At the moment, we have positive organic population growth. So we have more births than we have deaths. So that's good. And we've got a lot of really skilled expats who've decided to come home. And what they're doing, and this is interesting, I've read a really important article about this, is they're bringing massive amounts of skill. Many of them are still being employed by their employers, such as in the US or the UK. So that money now gets to flow into the Australian economy. They're bringing skills back, and many of them want to start businesses here. And they've got great connections and great skills to do it all virtually and online. That's a really good thing as well. We've got a travel bubble with New Zealand. It's only one way at the moment, but once we start doing more vaccinations, probably sometime later this year, it'll become two-way. But that doesn't matter as much, because people in New Zealand like to come to Australia and work and actually earn more income and have more opportunities than they can have in New Zealand. In fact, at any given time, about 10% of the New Zealand population lives in Australia. That's a really important driver of immigration and growth that we've actually got. But once our borders really start to reopen to the rest of the world, many people are going to start seeing how safe Australia is, how much opportunity there is, and how well we've handled things without partisanship, etc. And they'll want to start a family here, they'll want to build their careers here, they'll want to start their businesses here. And so the Australian government's already started talking about this, because one of the biggest drivers for property growth in Sydney and Melbourne, and slightly more so in Melbourne, is immigration. So the government knows that they want to be attracting a lot of people, and the right skilled people, because skilled people earn more money and they spend more money in the economy. So that's what I think is going to happen. And one of Australia's leading demographers, Bernard Salt, he's talked about this in a couple of articles. after world wars or things like that, Australia is seen as a safe haven. And a lot of people want to come to safe havens because the country that they're in may take years or even decades to come out of the economic mire that they're in, whereas they can see other places they can get up and running much faster and their kids can have a much brighter future. So that's what I think will happen is when our borders open, a lot of people will start thinking about, what can I do? How can I get to Australia? How can I live there? And what that's going to mean is it's simply going to drive property prices higher.